Ladies and gentlemen, good day and welcome to Morepen Laboratories Limited Q4 FY21 earnings conference call. We have with us on the call today Mr. Sushil Suri, Chairman and Managing Director, Mr. Sanjay Suri, Head of API Business, Mr. Varun Suri, Head of Dr. Morepen, Mr. Anubhav Suri, Head of Diagnostics Business, and Mr. Ajay Sharma, Chief Financial Officer. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should questions during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Also, we would like to remind participants that they may refer to the presentation that is shared with them on email. I now hand the conference over to Mr. Sushil Suri, Chairman and Managing Director. Thank you, and over to you, sir.
Thanks a lot. Good evening, everyone. I hope everyone is safe at home and request everybody to maintain all the social distancing, follow the norms, and stay away from the COVID as far as possible. Hope you guys have a full good time ahead. So without wasting time, coming back to the earnings for the quarter, your company had been doing very well. In spite of all lockdowns and restrictions and travel restrictions for the whole of the year, your company has given a upside of 39% of the total revenue, and the revenue had crossed 1,200 crore for the first time. We have gone into 4 digits, and there is a 67% increase in the EBITDA. Profit after tax has also gone 152% up, and consequently the profit after tax has jumped 189% to 97 crores. So we are almost touching 100 crores, and consequently the EPS has also gone up. For every share now we are earning 2 rupees and 60 paisa as compared to 75 paisa last year. And this is not only for the year, but the quarter was also very phenomenal. With the hard work of the team, in spite of all the again glitches, the net revenue has gone up by 40%, and profit after tax has gone up 143%. So before we slip into the details, I must add a little bit that the increase in profit is pretty significant. And obviously one of the big reasons is that during this year, the exports have jumped very substantially. 40% of your company's top line comes from the exports. And in the API business, which is contributing around 60% to the business, so 70%, 69% to be precise, comes from the export business. So your company has better exports, better margins, and of course, better addition to the bottom line. 140 crores of exports were extra as compared to last year during the year. And you can imagine that since the exports are at higher margins, good margins, and these are all exports to rated countries, they attract good margins, and the company's profitability has gone up. So without saying that, okay, export is the best, but certainly diagnostic devices also has done very well. All businesses have done very well during the last year. If we look at the individual sectors, API has grown by 44%, and diagnostic devices have gone up by 71%, and Dr. Morepen OTC division has gone up by 32%. They have not been able to do very well in case of finished dosages formulation, which are by doctor's prescriptions. Because of the lockdown, because of the hospital's closure, no OPDs were working, doctors are not meeting the medical representatives. So we have still struggling. We have lost 5%, but overall as a company, we have gained 39% in the year. Segment-wise, if we look at it, the API segment has gone up by 120 basis points from 60.8 to 62%, and diagnostic devices had an outstanding improvement of 450 basis points from 21.6 to 26.1%, and it has become a major, I would say, more than a quarter of a company is now diagnostic devices. Finished dosage share certainly has come down proportionately. Now coming specifically to the API business, so API business has grown 44%. In spite of, again, I would say, all the issues what we had, there were cargo restrictions, there were travel restrictions, there were staff movement restrictions, there were curfews and everything together. We still have grown 44%, and CAGR is 26%. So year on year we have been growing. During the last quarter, we have grown 51%. So that's a very great achievement. And as I mentioned, that 69% of the business comes from export in the full year. During the quarter, exports have grown 48%, even though domestic has also grown 59%. So total exports for this division has become 473 crores, which is almost, I would say, touching 500 crores maybe this year. So that's a great achievement for the company. It's a high quality business and non-regulated market. We have added 103 new customers in this year, even though that there were no connections, there were no flights, no travels, no exhibitions. So this all new customer addition, this speaks high about company's credibility, about the quality, the material, availability, service, and also I would say to an extent the China factor. More and more companies are looking to participate in India and to come down to India and buy from India. Adding new customers in this time of crisis was a big challenge. So we have been able to gracefully do it. And companies exporting to over 80 countries and in all the continents, or I would say market continents we call. So we have grown 36% in the US. In Europe, the company has grown 21%. Asia market has grown 48%. India, of course, has grown 55%. South America, 70%. And African markets have grown 47%. So all around there's a growth. It's not a particular one area, but all around there has been a growth. The Indian companies have also been growing, and all over the world there have been flush of orders, and companies have been getting orders at very good rates. So we look at the top 10 countries. So of course, after India, it is US, Bangladesh, Spain, China, Iran, Germany, Thailand, Pakistan, Israel, and of course, the list follows. Specifically, I would like to mention the API that we already have one big mega project coming for API, which is an expansion project, 178 crore, which was approved by the board in the last board meeting. We are already getting approval. We got approval from the state government. We got approval even for the environment clearance. And now the process of land transfer is going. But in addition to that, we are putting up an additional R&D center also. And the reason is that there is a big opportunity coming up for our API segment. There are 15 blockbuster drugs which are going off patent in the next 5 years. And out of those 15 drugs, so almost 13, 14 we are manufacturing. So that $42 billion market which is opening up for everyone. So we are all geared to catch that market, and we are ready with the products. As on today, our market size is only $2.89 billion, the gross market size. This is a finished dosage market size. So we need a capacity to build up those APIs. We are expanding the existing base also, but on the new project, we will be adding all these new molecules. So in addition to the API plant, we are adding one big R&D center also. We do have R&D labs, but now we are investing behind an R&D center also, around 55 crore rupees, so that we can have R&D of the new molecules, not only the API, but for the finished dosages also. And taking a leap forward from APIs, we are going to file the ANDAs of these products also. 13 of such ANDAs are in various stages of development. 6 ANDAs are ready with up to the pilot bio, and another 5 are in the process of lab scale, and another 2 are ahead of the game. So all these 13 ANDAs related to these products, and of course more ANDAs are in pipeline, more teams being hired, and formulation development part is also happening. So API supplemented with the ANDAs, that is where we are going. R&D remains the backbone of the company, and as you understand that company has got a lot of IP. The company has 135 patents to its credit, 129 DMS filed in various parts of the world, 13 approvals that we have got from China, ideas, and of course 30 new products have been added over a period of time. During the last year, we added 10 more patents and 18 DMFs, 1 ideal, and of course added 5 new products in the last 1 year. And people working from home, only the bench work is happening in the labs. Senior guys are still working from home. We do not know how long it will go, but we continue working in spite of all the crisis. So looking at the API opportunity and looking at the growth which it has, certainly the API remains the key focus of the company, and we continue investing behind this. The next element, which is the big element for growth, is the medical devices. Medical devices business grew 71% in the last year with 41% CAGR, which is, I would say, very impressive for continuously 4 years. 71% growth in one current year, and quarterly basis it grew 57%. So now 71% growth looks high. So the question is whether it is one time, will it continue? The answer is yes, there is a high possibility that such type of growth will continue. So what we are seeing is that there is a change in the lifestyle of the people, there is a change in the habits of the people. That diagnostic spend has gone up substantially. So the people were spending few hundred rupees in diagnostics, maybe just to buy a thermometer maybe once in a year or something. But now the diagnostic spends have gone up as high as 5,000 to 6,000 per month. Of course, these days a lot of testing is also going. But other than the common thermometer which we were carrying, maybe there was one thermometer in the whole building and you could borrow. But now people are keeping 2, 3, 5 thermometers at home. And then there are oximeters, non-contact thermometers. And this time of the year when there's a huge shortage of oxygen in the country, oxygen concentrator is the huge demand. So we have a lot of pressure to supply the oxygen concentrator at whatever, I would say, prices we can. So there's a huge shortage of the raw material still. Our basic raw material still come from China. There was a flight disturbance. And we are hopeful that even in this month, we'll be able to supply between 2,000 to 2,500 oximeters. And going forward, we'll try to increase the capacity of the oxygen concentrator. Oximeters will go up to 10,000 oximeters. And oxygen concentrators also between 5 to 10,000 per month, depending upon how the pandemic goes. But pandemic or no pandemic, it looks like that oxygen concentrator is going to be a part of your house, like you have a TV at your home or maybe a fire extinguisher at home. So you need an oxygen concentrator at home. That's how people are thinking now. And of course, urban houses can still afford it. Hopefully, the oxygen supply in the hospitals is maintained and people do not need to panic. But we understand that this is a life-saving instrument which people would like to keep it at home. And we are certainly trying to fulfill whatever demands we can in this hour of the crisis. So last year, there were two growth drivers in the sales of the company. Glucometers grew by 51% and DP monitors grew by 117%. DP was one category which was not growing so fast, but last year, obviously, because of the lockdown, people are sitting home scared and, of course, worried about their elders and everyone. So a lot of people buy DP monitors online and offline. Glucometer sales, of course, is growing very fast. And if we look at the number of strips sold, last year we have sold 188 million, 8.8 crore strips we have sold last year, while we have totally placed 60 crore strips. The 18 crore strips have been sold last year. 5 million meters have been installed in the market. The more meters installed, the more strips we sell. So we shared last time that the business model of the company is to install more and more meters. And as we install 1 meter, for every meter installed, we have an annuity sort of a thing that, okay, we get strips sold for the rest of the life. And we have a extraordinary service quality which we deliver, and we exchange the meters for any default which has like a lifetime guarantee, virtually 99-year guarantee we give the meters, so that people keep buying the strips. And it's a good service company provides. On the devices also, we have massive expansion plans. Basically, it's happening two ways. One is that devices, the business has gone up to a critical mass. We already achieved around 287 crores. So we are seeing this business grow exponentially next 3 to 5 years, rather I would say 3 years. And the company has decided to spin this off as a 100% subsidiary, which will be demerged as a 100% subsidiary and through an NCLT route. And devices business will come up and stand in its separate company. Of course, 100% ownership will remain for all the shareholders. Then at that stage, we can attract maybe some private equity partners. We can attract technical collaborators. We can have strategic partners. We can have any other technical partners or acquisitions happening. So we are open for acquisition in this business, and we are also looking for some like-minded people for partnership. And of course, we are eager to have any joint venture for our backend technologies. So when we look at the expansion plans, so we have two types of expansions which this division is looking for. One is into the core technology, which are the back-end technology to manufacture key components. So that is more like either we do for I would say, right? Yeah. So either, for example, in the glucometers, we have manufacturing strips, but we still have to import the enzymes, which is coated on the strips. So at some stage, we would like to manufacture those enzymes in India. It is not only for glucometers, whether it is glucometers or maybe it is for, I would say, pregnancy, or it is for rapid test. We can go all enzyme for all the diagnostic devices. Then for all medical devices, you need PCBs, you need SMT. So these are the basic things which we import. So at some stage in life, we need to manufacture these in India. And this is where India is still suffering. We still have to import little things. In oximeters, there is a special sieve which is used to filter the air, filter out the nitrogen out of the air, and pure oxygen is left. It's a molecular sieve. We're looking in case we can manufacture molecular sieves in India. So these are the backward integration, I would say, the core technologies. And second expansion, what we are looking is for the connected devices, whether it is in terms of BP or gluco or your health parameters. So all these things are looking forward. So we have investment plans of 150 crores. Some may be funded through the new money which is coming up, and of course there's sufficient surplus with the company which we can invest here. It will take around 2 years' time, and of course there will be robotic controls and there will be some new hirings also. So this we want to increase the production value up to 2,000 crores in the 3 to 5 years' time. For this, we already have a land and the same land parcel at Baddi. So we have already identified the land and we have started working on transfer of land in the name of the company. Then the next business, the third business which we already talked is touched a little bit, is the finished dosage. There was not much growth in the business, rather there was a 5% decline in the year in terms of the domestic business. But for international level, we have 13 NDA which we are preparing, and of course we are working on the non-infringing processes, novel formulations and novel polyprofit forms, and maybe to start with, and of course we are developing a lot of new combinations. Here our focus is on diabetic market. We are working on 6 diabetic products, $6.2 billion market, and then we have 5 cardiac products, which is about 23.61 billion markets. A lot of blockbusters coming up in the cardiac. There's one product, Apixaban, which is like $19 billion. You can imagine when the product will come up. So we already have some special formulation where probably we will have a early launch we can think of, but still 2025, 26 one year. Okay. Then we are also filing product ANDAs for our regular products like Quantilucard. So a lot of work is happening. This project will cost you 100 crore rupees, and of course it will take 2 years' time for full completion, automatic filling and packaging line. But this is happening in phases. Some parts will start early. We may start in 6 months. The pilot phase may start in 6 months' time. So there's a lot of investment happening.
Excuse me.
And then the last.
I'm sorry to interrupt. So your voice is breaking.
I'll try to keep closer to the computer. Yeah. The last one, of course, is the OTC, which is Dr. Morepen, which is already our subsidiary company and actually doing independent growth. We grew 32% in this, and the CAGR is 20%. So the last quarter, it grew at 26%. And going forward, so we would like to highlight more on this. This brand has become rather, I would say, a household brand. Last year, we launched a lot of the products related to COVID, related to immunity, vitamins, multivitamin, vitamin C, Chyawanprash, Haldi, and there was Kada, all these things. And then we had Bandapal disinfectants, septic disinfectants, sanitizers, hand wash. But this year we could see that these things are already saturated and many new vendors have come up. But there is more and more what's happening with all the younger generation. They are certainly sitting home, and in general also we would like to do the online shopping. So we have launched an online shopping for Dr. Morepen, and we have introduced a special exclusive online range. Here we have skin collagen, muscle foods, products for sexual wellness, green tea, honey, omega-3, of course, medicines and tablets for stress and sleep, weight loss, slim shakes, and of course, common products like beetroot, apple cider vinegar, and many more products coming up. So online is the future for the health and nutrition, and we are seeing that the new millennials love to shop online, and they want products which they are not looking only products of cough and cold. They're looking for much better range of products what Dr. Morepen is providing now. Of course, we have another division which is catching up very well in online sales. We're getting out 26% online sales in our personal grooming division. We have a brand called Gum. Presently, it is only for the female grooming. So maybe at some stage we may do the male grooming also. So it is primarily for the makeup brushes and I would say these brushes and foams, and nail cutters. These are all grooming products, but more and more into the I'd say quality high-tech products which are usually not available in India. Recently, we have launched a range of beauty soaps also during the COVID time. So that is also doing very good. Then your company has plans to launch a specialty skincare which is more based on a scientific study of cosmetology. And instead of saying gimmicks, we want to give a real nectar to our people in India who want to take care of the skin. This is a specialty brand yet to be launched. We're still working on it. That's broadly, I would say, the area, but in Dr. Morepen, the expansion plan is around the reach and around the number of products. So basically, it is health, nutraceutical, energy, Ayurveda, cosmetology, and of course, a lot of packaging innovation which is happening. If you look at the number of products, so for the trade, we have around 100 products, and we want to go to 500 products in 3 years' time. In health and nutrition online, so we already have around 100 products already in the market. So we want to do 1,000 products in 3 years' time, and the team is fully geared for that. In the grooming, we have got around 200 products, and we're going for around 500 for the coming 3 years. So your company is all geared for Dr. Morepen's extension, which is to cost total around 100 crores to be completed over 3 years, including online, e-commerce setup, brand building, social media, and of course up to 1,000 crore value in terms of sales in the next 3 to 5 years. Financial, we have already discussed, but just to wrap up, net revenue up 40%, expenditure up 36%. There's a 4% saving in I would say expenditure, so it adds to the bottom line. EBITDA is up 68%. Profit after tax 143%. These are quarterly figures, 143, and EPS is also up 143% in the quarter. But if the year as a whole, 39% net revenue up, expenditure up 36%. Profit before tax 152%, after tax 189%, EPS is also 189%. Then we have operating ratios. Debtors have gone down, inventory has gone down, current ratio is substantially up, interest coverage is substantial. Operating margins have gone up by 74%. Net margin, of course, is almost 108%. Balance sheet ratios are also very healthy. Reserve surplus gone up 42%. Debt equity is up 29%. Capital employed is up. Return on equity has gone up by 101%. Return on capital employed is also up. These are all technicals that we got. But net company as a whole, we are the team has been working hard all the year round, and we are happy to see the challenges around. But yes, we didn't know how long this COVID would stay. But as a company, we are geared to work around it and see what are the products people will be needing in these difficult times. I would like to deliver that. That's broadly the macro view. And I would like to leave the stage open in case there are any questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. One who wishes to ask a question may please press star, then 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star, then 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask questions, please press star, then 1. The first question is from the line of Vaibhav Vinod Soni, an investor. Please go ahead.
Sir, congratulations on such a exponential growth, and thank you for the opportunity to get myself notice and get clarification on some questions. I have 3 questions actually. First of all, the prevailing growth, do you agree that some part of this growth is also backed by the COVID pandemic demand? And if yes, especially in diagnostic equipment, if yes, how long do you think this growth will continue, and what will be the correction in our TOI growth and margin after that? Second question is, if you can please share segment-wise margin, EBITDA, PAT, or gross margin, whatever you can. And third question is regarding expansion part. You have told us that the expansion will be funded by internal accruals and the investment that we have received. Are we also looking out for banking debt for this expansion? And if yes, how much? Thank you, sir.
Thank you, Madam. I think you have got the very, very valid question that if the growth is sustainable, if the 71% growth in the diagnostic devices, can we sustain it? And I would say that anybody guess that how long COVID will stay. But one thing I would like to add, whether COVID or no COVID, people are now, I would say, getting serious. They're getting serious for their health. So if you need to take care of yourself, you need to monitor your parameters, you need to monitor your oxygen.
Sorry to interrupt. What you're saying is correct. But when I consume a medicine, I will again go out and buy a medicine. But if I buy a diagnostic equipment, that is with me for the next 2-3 years. So that's not a revolving demand. So my question comes from that perspective.
Yeah, that's what I mean. So it's basically now that diagnostic consumption doesn't mean that, okay, the same person will keep on doing it. Like I told, for example, in glucometer, we just got 5 million users, but the market size of India is 70 million users. So even as to go to that market, even if I take 10 years, and by that time we are with the market rate. So it's basically more reach, more penetration. As in today, we are talking only, I would say, tier 1, tier 2 cities. So we still have to go down. And it's basically changing of the lifestyle. But yes, is the, for example, demand like oximeters and oxygen concentrators, this may be, I would say, to an extent temporary. And that is why we are not actually banking much on this. But what we are trying to do is to find equipment and devices which keep you safe for the rest of your life. And our company is specialized primarily on the home diagnostics and point of care devices. A point of care devices will include, of course, devices which you use at home. We nobody thought of oximeters earlier, nobody thought of oxygen concentrators. Similarly, there are hundreds of things which are used in hospitals, which are used in nursing homes. There are patient monitors, there are on-site monitors, there are portable ECGs, there are 100 things which is like a point of care. So as Morepen and your company would like to focus more and more on the point of care devices. And as I shared that the lifestyle of people is changing now, the younger generation is coming more and more to gadgets. They are used to holding these gadgets in their hand and they want a reading on their apps. This is where we are confident that demand will continue, but not necessarily the same products will continue. But segment as a whole will keep growing, but not actually at this rate. Okay. Second point is on the segment-wise EBITDA that I will leave on the CFO. And expansion, do we need any debt? Yes, we have already sufficient cash flows in the company and we have got equity injection coming up. We do not have any plan to raise any debts in the immediate future. And we are already a debt-free company. We just have to reference capital with the bank which we have to honor. Other than that, we do not want to get into any debt. So Ajay, would you have handy segment-wise EBITDA numbers with you?
Yes, good evening.
Good evening, sir.
Primarily our EBITDA is driven by API business. So to the extent of top line, it also contributes to the bottom line as well. So we have around 67% of API business. And to that extent, we have more or less 1 or 2% plus minus. We have EBITDA. So same goes to the net profit level as well.
Yeah. I'm sorry, sir.
Segment-wise EBITDA, I'll take this question. Segment-wise EBITDA, if you say, I think basically API division is one business, which is, I would say, around 12 to 13% EBITDA which we are getting. Diagnostic division has delivered around 20%, and finished dosages as the business was down hasn't contributed very well this year. And OTC, the EBITDA is still very low because there's a lot of pipeline spend. We are around 5 to 6% EBITDA.
Okay. And sir, the expansion project where we are developing all these facilities will focus on the API production, manufacturing.
No, API, devices, ANDA, all the three, and of course, development of our brand, Dr. Morepen, on the OTC side.
Okay. That's it from me, sir. Thank you very much for the answers and best of luck for the future interview.
Thank you, Baba. Thank you.
Thank you. The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Yes, thanks for taking my question and congratulations for very good numbers. So just one thing on API side, whatever we are investing, I think we have now environment clearances also. And what I anticipated that once that environmental clearance comes up, then this should commercialize soon after that. So, but presentation mentions it will take 3 years to commercialize. So just want a clarity on it.
Thank you very much. So basically, for when you say 3 years commercialization, the complete times. So it starts, I would say it will take 9 months to 1 year for the civil work and another 1 year for making the machines and trials. And the third year, we will have a full production. But not all the blocks will take 3 years to complete and commercialize. So, of course, the building has yet to be made. This is not a plant where we are ready and we are waiting for environment clearance. So this is a new block of production which is coming up. And then all the blocks may not take the time. Intermediate block may come much faster, and then the other blocks will come. So you may start seeing the production from the new block maybe just after 18 months, one by one.
Okay, so apart from this new API block, have we expanded our existing API production also?
Existing API we haven't expanded, but that there is a limitation. We are doing in the same production block. We can add 1 or 2 reactors, we may add 1 or 2 centrifuges, we may add some balancing equipment. We have added labs, we have increased the size of the QC, we have increased the size of the warehouses. But new production block from scratch has not been built up. So this is for the first time after 20 years that we are building the new production blocks at a attached site, basically to make a new factory.
Okay, so this 178 crore entirely would be commercialized after 3 years? So this is phase-wise, we'll
No.
part of it
will be done in phases. It will be done in phases. And of course, since it was being done from cash accruals and of course money coming from the promoters, now the investors' money is also there, we will be able to do it faster.
So is it possible to give some year-wise what portion of capex we'll see getting commercialized in FY22 and in FY23?
We haven't ready at them. So basically, since last week only we had got approval from the board and is yet waiting for the shareholder approval. So maybe in the coming board meeting we'll put on the capex plan. So as of today, these are, I would say, broad contours, but certainly we have to work on year-wise scheduling and maybe need to work little on that.
Okay, fine. And
thank you.
Yeah. Sir, and second one, on that Kornit investment, we saw that Kornit is going to invest some 100 million. Of that, 32.5 will come in Morepen. Where the rest of monies are going to, which sister concerns they are actually investing in?
Yeah, basically, Kornit is investing back to 32.5 million. Rest is invested to promote entities, and 565 crores out of 750 approximate 750 crores were expected. Around 75% of the money is going to Morepen only, because promoter share is also increasing. So there's an increase of promoter share from 33% to 44%, and 9.41 would be increase in the share of the Kornit. So basically, maximum money is coming to Morepen. That is why it's a Morepen group.
So rest of money is going indirectly to promoter. That's what you're saying?
No, it is coming to Morepen only. 565 crore money will be invested to Morepen because promoters have to subscribe for the warrants, And the promoters have to pay 75% money of the volume subscribed. And there's additional equity which promoters are buying, 5 crore shares, where also the funding will be done through this.
Okay. So as on that, how much cash we have received?
We have yet to get approval from the shareholders. We have sent notices to all the shareholders. There is an extraordinary general meeting of the shareholders, which is planned for, I think, 20th of May. So once we get share approval and stock exchange approval, so we will be receiving the money. Promoters have already given their 25% for the warrants, which was allotted before 31st March.
49 crore roughly is from promoters, right?
43 crores.
43 crores. Okay. Okay.
Thanks a lot.
Yeah. Thanks. I have a couple of more, but I think a lot of people are waiting there.
Thank you very much.
Thank you. The next question is from the line of Umakant Sharma from EM Capital Advisors. Please go ahead.
Yeah, hi sir. This is Umakant Sharma. Thank you for giving me the opportunity. Sir, I had one question. I think you've briefly alluded to it, and I'll just repeat. Pardon me for my ignorance on that. Could you just tell me how much exactly the money has been raised in the current round? Via the external investors as well as the promoters, and what is the utilization of each of the entire proceeds, and what is the timeline that you're looking at from a utilization perspective?
Great, Mukherjee. Like we added, that 32.5 million will be coming directly into Morepen after the approval from the shareholders and stock exchanges. That is by end of this month. And the rest of the money which is coming through the promoters would be around 300 crores. This will be coming by way of subscription of the promoters' current equity plus the subscription of balance subscriptions of warrants. 565 crore approximately will come to the company. And as far as timelines are concerned, within, I would say, next 2 months' time, the whole money should be in. Even though for warrants, we have got 18 months' time to subscribe. But we will, whatever the shares can be allotted during the year, we will try, because as per SEBI norms, promoters cannot increase share more than 5% in 1 year. So we will see as per SEBI norm how much shares can be allotted during the current year. But as far as the utilization plan is concerned, actually the we utilize overnight. So that is why we have 4 projects, and some civil work is also involved in the API because it's hard construction. And then there's the diagnostic devices and combinations. So I would say it is anywhere between 18 months to 2 years time for investment. And of course, side by side we'll have internal accruals, but a lot of money will go to working capital and settlement of some old preference capital in the bank. That will use faster.
Okay, got it. And sir, could you just briefly throw some color around what exactly went behind for you to go so aggressive and take raise so much of capital and deploy it in the business? When I look at the current asset gross block, that's like about whatever the number, but you've gone ahead and raised a lot of money. So what makes you go so aggressive on the overall business?
I would rather say that we have been very slow. We haven't done anything in the last 20 years. And
so that's what, suddenly you're raising such a big round, and what exactly transpired in the whole process?
Kanji, I think it's more of an opportunity, and it's the market confidence that now more and more people are looking at India, and everybody is looking for a company which has a hardcore technology and a backup of API, and of course the R&D. And certainly Morepen is the best candidate for that. We had many opportunities last time. Many people were approaching us. They wanted to buy us out, and of course pharma is the market, and India is the hub for the pharmaceutical. Secondly, our diagnostic devices business has placed an edge because of the COVID. And third, I would say as a brand. So as a brand, Dr. Morepen as a brand is very well established. So we tick all the boxes of any investor that, okay, whosoever investors are interested in India and in healthcare. So Corinth has done complete due diligence around us, and of course there are multiple rounds of discussions. They appointed third party outside agencies for the due diligence, including legal due diligence. and they could figure out that, okay, here is an opportunity, and of course at the right price also. Most of the pharma stocks are beyond reach, and you won't buy a pharma share less than 500 rupees. So they could see that, okay, here's an opportunity to invest, and of course like-mindedness in the thought process that they are looking for emerging markets and we are also looking for growth opportunities. And of course, there's a win-win situation. But more importantly is that, is it sudden? No, it is not sudden. It is a planned effort. We were earlier working to pay out the banks, and we cleared our debt book first, and now we are a debt-free company. And last year, in spite of the COVID and everything, we had no problem of the banking, no problem of the debt, because at right moment of time, we cleared all our banks. So that is a long-term plan, and the last 7-8 years the company has been working. We have prepared our ANDAs, we have done R&D of APIs, we have developed the APIs, we have launched brands, we have launched diagnostic devices, and all these things have been done, by the way, without any working capital. We have zero working capital facility. So we were waiting for the right time, but okay, at appropriate time, at opportune time. So we have to get into the second league, and it is not overnight. So within Morepen, there were 4 companies which are being doomed. So all those companies have now come off it. And for example, this diagnostic devices has gained a critical mass, so it will be spun off as a separate company. It can have its own independent future. Similarly, in OTC, Dr. Morepen has its own independent future. API certainly would remain the forte of Morepen. At some stage, finished dosages, when we reach to a level, then it have its own line. So basically, there are 4 different business segments which are being developed under one umbrella, I would say, if it answers your question.
Yeah, and sir, great. Thanks for such a such a brief answer. And just one quick, one small question, if I may put in. Is that when you are putting in, everything in place, you have got diagnostic devices in place, you're getting an API, you've got final dosages, you're hitting the bullseye everywhere. And now when I look at, let's say that you're putting a capex plan also to work, when I look at the numbers, let's say sitting in 2025, what are the numbers that you guys are setting and aspiring for from a financial standpoint?
Umakantji, as a listed company, I will not be able to give you a guidance, but yes, I would say the trend will continue. We are hopeful and confident that in all directions we are growing, and we have good plans and targets. And thankfully, the markets be supporting. God forbid the COVID theme. So we are comfortable, and the team is very well geared. The market is geared. We have the receptivity. We have the feedback from people. We are confident of continuing the growth rate. I want to be able to do that.
And would you say that the margin profile of the company would also change meaningfully?
That's right. That's right, Umakantji, because when we increase export and we go more towards forward integration and more towards, I would say, even finished dosages, the normal EBITDA of any pharma company, if you look with API and finished dosages together, so typically pharma EBITDA is between 18 to 20%. We're still at 11%, which is
correct.
Neither here nor there. Yeah. So we have a lot of room to, I would say, grow. But since we are a mid-sized company, we will need some more energy, and so I would say more tonic to run. So which now we are getting.
Okay, great. That's it from my end. Thank you so much, and all the best.
Thank you, Umakantji. Thanks a lot. Have a good day.
Thank you. Participants who would like to ask questions, please press star, then 1. The next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, good evening, sir. Congrats on a great set of numbers, and thank you for taking my question. Sir, firstly, I'd just like to understand that while on full year basis you've given some phenomenal numbers, if you see on quarterly basis, your revenue run rate has been sort of coming down, and you margin wise also EBITDA also you've sort of been in one range over the last 3 quarters. Can you just share your views or give some color on that?
Yes, Alisha. If we look year as a whole, certainly we have grown, and quarter to quarter, when we compare to the last quarter, it is grown very fast. But as compared with quarter on quarter with previous quarter, so it is degrowing technically because September quarter was exceptional, and we all understand that June quarter was a complete lockdown, and there was a pent-up demand which we serviced in the month of September. So we do not want to take September as a benchmark, but I would say that if we are doing, say, now 1,200 crores the year as a whole. So if we average out, so average is 300 crores, so we have done 290 crores in this quarter. While the first quarter was low, but September was exceptional, 330 crores. So there is nothing like quarterly business or a seasonal business, and because of COVID, since everything is disturbed all over the place. So this certainly was a correction which September had shown, but otherwise, other than that, we are doing pretty good. And it may take another, I would say, 2 to 3 quarters for the numbers to settle because pandemic, because of the COVID, every month situation is different. Somewhere there is a lockdown in one place, somewhere is the flights are disturbed, sometimes Europe is disturbed, sometimes US is disturbed, sometimes there was US elections. So last year we have seen almost everything. So in spite of that, we have done, I would say, we are good.
Okay. Maybe like you're saying, in 2-3 quarters, we should start seeing Q-on-Q growth also coming in. And just to clarify, there is no capacity constraint due to which you cannot currently go beyond this run rate. It is simply external factors, COVID and other macro factors, which is sort of causing this variance.
I would say that we do not have capacity constraints, but I would say that it doesn't mean that we have unlimited capacity. So certainly we are adding up, but that is not a constraint for us to deliver. That is in products like oxymeters and oxygen concentrators, there was a capacity constraint. But for API, we do not have any limitations. In specifically even glucometers, DC monitors, there was no shortages. And the capacity is not a constraint, but yes, we want all boxes to be ticked. But our team has done a phenomenal job, and in spite of all the things, we have been able to deliver better results.
Okay.
Thanks, Arisha. Thanks a lot. Yes, go ahead.
Sure. Thank you. The next question is from the line of Saurabh from IIFL Securities. Please go ahead.
Good evening, sir. Thank you for giving me the opportunity and have a great set of a number. My question is on the API theme. So what you are seeing in the API theme and what is the difference between in China and India? Can you explain me in this?
Yes, Saurabh, in the API, the basic story is that India is the leader in high-end APIs, wherein we work on the, I would say, multi-stage synthesis, complex reactions. For example, we have a lot of efforts on Greener reaction, Green-Craft reaction, high emission, hack reaction. So basically, we work more on the high-end chemistry and multi-stage synthesis. While China is for the volume, for the large volume, which we call intermediates or key intermediates. So China doesn't have facilities which are well documented. They do not have US FDA approval. Rather, they are shy of even getting US FDA approval. So in case we ask for their documentation, we ask for the site master file, we ask for the product master file, they do not have. And even if they have, they don't give. And even if they give, we do not know what it is because it is all in Chinese. So there is no reliability factor, and nobody in the world wants to deal with China because of that reason. Pharma sector is very open and transparent. You have full open documentation, audit compliant software, audit compliant instruments, and any time auditor can come, inspector can come, and we welcome auditors and inspectors because they let you know what is wrong with your facility and they help you improve that. But China is closed on that. Chinese, they don't have documentation, they don't have any approval system, and they don't like it. It's like a trading house. I mean, like typical other, in case I give a parallel example from Delhi, Sadda Bazaar or Chandni Chowk. So that's what China is for our market. So that is where our India is, we have a lot of opportunity. All the international companies are looking for India for good quality documentation, good quality, I would say, facilities, good quality of products, and sustainability. And there's a commitment also. If we take some order, even if we have to sell it at loss, we will do it. Chinese companies will never do it. They will get the orders.
Okay. So my two question is there. Second question is there. So what last 5 years we have seen too many audit from the US FDA. Now this current pandemic situation is going on, so that's why the audit is not taking place on the Indian pharma. but still there is a lack of compliance from the Indian pharma company. So what is the reason behind that, sir? I wanted to understand this. So why Indian pharma company is lacking this? Why they are satisfying the US FDA audits?
Saurabh, I would not like to degrade our colleagues and counterparts. I would say we are proud that India has been able to successfully lead, but yes, there were problems in the past. Most of the companies have come out of that. But I would proudly share that as Morepen, we have never got any audit signature. We have got all the inspections with the nil 483 and 0 observation, and there is no pending observation. But doesn't mean that we are perfect. So we try to match the standards, and anybody who can match to the written guidelines. FDA is not a crime that, okay, this is what you should do or not do. There are fixed guidelines. If you follow the protocol, and as a responsible company, we know that life is important and products are important. So more and more digitalization is happening, more and more software compliance is happening. And I'm sure the industry will come up. But if some of our friends had not done in the past, but I'm sure there will be some issues. But in general, the country as a whole, we are pretty confident, and I would say we are much better than China. And as Morepen, we are committed to the FDA. We help and we respect the guidelines, and we are fully committed to comply with that.
Okay, thank you. And my last question is on the what is the pricing stability in the API businesses in the hello?
Yes, Saurabh, go ahead.
What is the pricing stability in the API business and outside the India businesses and in the India business also? Can you give this segment-wise revenue? And so what will be the promoter holding after this equity infusion from Catharod?
Yes, coming to the prices, I would say technically you may say there is a pricing stability, but I can still say within unquote, there is no price stability. Prices are fluctuating because the raw material are shortages. There is a price fluctuation from the raw material. So similarly, there is a price fluctuation for the end product also. But wherever we have annual contracts and we have long-term relationships, we are servicing those customers sometimes even at a level. So I won't say there's a guarantee. The market is changing, market is dynamic. And in this time of crisis, more important is to keep ourselves up to date. And the idea is not to fight for profit or orders at every stage. We are trying to balance out the things. The whole important is to stay put and be available in the market. In spite of, I would say, good, bad, ugly, problems come, problems go. But we are here to stay. We sometimes help our customers, sometimes we request our customers that this is where we are, so you please compromise here. And coming specifically to your point on the promoter's equity will go up from 33.54% to 44.28% after the subscription of all the warrants. And on a diluted equity, including the warrants will have 9.41%, promoters will have 44%.
Okay, thank you. And last question on the dividend side. Sir.
Yes.
Will you be giving the dividend in the foreseeable future? Are you planning to give the dividend?
Yeah, technically, your company is now out of that so-called carry-forward losses, so we can technically declare the dividend. So we'll see what decision is taken at the shareholders meeting in the forthcoming AGM. But sadly, before going to the shareholders, we will draft a dividend policy at how much money is company need to save for the future growth and how much money should we distribute. So we will try to balance it out. Maybe it may take another 1 year, but otherwise, I mean, frankly speaking, in today's world, no investor is worried about the nominal dividends. But more important is that what is the growth we have cash still working on.
Okay. Thank you. Thank you, sir.
Thank you, Saurabh. Thanks a lot.
Thank you. The next question is from the line of Hiten Muchala, an investor. Please go ahead.
Thank you so much for the opportunity and congratulations on a great set of numbers, sir. Also, congratulations for a credible investor like Corinth coming into our company. And that's something, sir, that I'm not very clear on. You have mentioned the press release says that they are bringing in $100 million, and what I understand is that they are bringing in $32.5 million directly into Morepen, the promoters are bringing in their share of money through warrants. Where is the rest of 67.5 million going? Can you please throw some light on that? That is first question, and then I'll ask you the second question.
It will be like as far as listed company is concerned, for which we are discussing, you're right, $32.5 million is coming. But since the understanding with the Corinth and the contract signed is for $100 million, so naturally they were insisting that we give a total press release that as a Corinth group, we are bringing in $100 million, even if we are bringing to the whole group. So as a group, we are receiving the money, and out of that $100 million, around 75% of the money is coming into the Morepen only, that is 565 crores. Another $25 million is going to another group companies which are unrelated to Morepen. There is online generic pharmacy which is coming up, and then there is a hospital which is not in the parent company, but that is also coming up in Chandigarh. So this is because medical system. So they are investing in that. They have a lot of interest in healthcare in India, and they are very bullish about the hospitals also. They are investing in that also. So that's why we mentioned that out of this, a major portion is coming to Morepen only. So otherwise, you're right, officially 32.5 is coming directly, and certainly we could not have allotted them all the equity because there's the applicability of takeover codes, and we do not want our existing shareholders to lose out on this opportunity. And we do not want that, okay, we should ask our shareholders to go because someone else is coming up.
Okay. Thank you. And the second question is on the API margins, and I guess your voice was not here and probably I missed out. What is the EBITDA or operating margins currently on API segment?
API segment EBITDA margin is around 15%, 14 to 15%, but this will improve as we go forward. But overall company EBITDA is around 11%. And then we have finished dosages, then we have OTC, then we have diagnostic devices. Diagnostic devices around 20%.
So, sir, you mentioned that the margins you are looking, you are expecting the margins on API to move forward. I mean, we go ahead. What's going to be the API strategy? Are we focusing more on the generic side or more on the complex side, which is ARVs and or are we planning to, or should we look at our company as an API to formulations player, which is end to end? How are we looking at ourselves, sir?
I think our strategy of API is very clear, as I shared earlier, that our focus is on the blockbuster drugs, which are the leading patent in the coming 5 to 6 years. There is a market of $42 billion, generic market of $42 billion, which is opening up in the next 5 years. And we have developed all the products. We are developing the DMF. We have filed some DMFs in the US, and we have developed ANDAs for that. So our strategy is very clear. They are focusing on the highly regulated market, and we are naturally not into the common products. We do not do antibiotics and other common products. We do high-end, high-value products with complex chemistry and multi-stage synthesis. So that is the core of the company. And as a strategy also, we have a very clear-cut product line, product basket, which is available with us, which we want to do, and our customers know it, and we are trying to tie up all those things. And as a strategy, since we know that we now have a basket of around 30 products, so we can have our own ANDA, and we can have our own front end in US. We have a US subsidiary, Morepen. So at some stage, Morepen will file ANDA, and we will create our own base in US market. That's the strategy for our API.
All right. And sir, how many scientists are we looking at hiring currently in this new R&D center that we are proposing to set up?
It would all depends on the availability and time, but I would say it's too early. So we have just approved the investment plan, but we will come back to.
Okay. Thank you so much, sir.
Thank you, Hitenji.
Thank you. The next question is from the line of Vivek. Ladies and gentlemen, we take the last question. The question is from the line of Vivek Bhargav from WealthBridge. Please go ahead.
Yeah. Can you hear me?
Yes, Vivek, go ahead.
Yeah, most of my questions have been answered. I just have one question on your presentation. In that you have mentioned, for example, for the API project cost is 178 crores, and there is a figure mentioned 4 to 17 crores as production value. What does this production value mean? in the presentation.
This production value is the production value of products which we are going to produce in the third year of operation.
Is it per year?
In the project report. Yeah, this is third year. Sorry. Third year after commercialization. Typically, once the project production is stabilized, so that is the figure. It is coming from the project report.
That would mean a very high asset turnover ratio. I mean, I have not come across asset turnover ratio of this kind anywhere.
These are all high value drugs. So, like just chatting, these are high value drugs, and this is nothing to do with what is the value. And of course, it all depends on maybe we just do for 20 products, only one or two products. For example, only one at Exaban is $19 billion. Maybe even if the residual market, when it goes married, even if it is $3-4 billion, that's a huge market.
Okay. Okay, that's it from me. Thanks.
Thank you, greatly. Thanks a lot.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Sushil Suri for closing comments.
Thank you, everybody. Thank you, all the participants, all the shareholders, all the analysts, and of course, thank you to the whole team for supporting the chapter. So we had a wonderful year. I urge all of you to stay safe, please take care of everybody at home, and please do not have panic. Whatever the shortages are there in the market, whether it is oxygen supply or it is concentrators or anything, life will come back to normal. We'll forget everything after a few months. Let's pray everything is good, sir. Have a good evening. Thank you, guys.
Thank you very much, sir.
Thank you, sir. Thank you.
Thank you for arranging this conference. Thanks a lot.
Ladies and gentlemen, on behalf of Morepen Laboratories Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.